Hello everyone, welcome to the Echelon 1 weekend newsletter report, and let's get started right off the bat. As always, we're going to start with ES, or the S&P 500 futures. So as far as ES goes, there was short squeeze rally Friday into close. As we said, that there might be, because VIX was contained all day as the futures were dropping, as the index was dropping. VXX was contained all day. It makes sense for the shorts to cover into the end of the day, and VXX was just a signal to say that, hey, that might happen. So we have ourselves a short squeeze into close, but only so far as coming into a place of supply. So it's all going to depend on how Sunday opens. Insofar as we can see here, we have lower lows going down, lower highs going down. Exception being here, end of the day, the low here was 32.25 and the low here is 32.26. So kind of a double bottom, but still not broken out of any highs enough for us to say that, hey, this is going to be a reversal. As we see, this is still here, this is still here, so the trend is still undoubtedly down unless we break above certain levels. Switching to the weekly, there is an interesting, this is what I like to call my macro bull bear line. So right here falls at 31.50, give or take. This is a very, very, very powerful trend flip right here. So 31.50 is, if it ever gets there, this is going to be a very powerful level. Why? Because this is where everything kind of happens around. This is where the top was coming into it. In the prior years, this is what a breakout was. This is what a retest of the breakout was. When the breakdown occurred on the crash, this is what a back test was. When the subsequent breakout after the crash happened, this again is where the back test was. So very important level here at 31.50. Keep a very close eye on it. For the short term, it's kind of a coin flip for the time being. And why do we say that? It's because, yes, this is very bearish, lower lows, lower highs, short squeeze into close. However, the low here is still intact. So unless we pierce 3200 on the downside, this is still no man's land, so to speak. Huge supply levels here at 3360, should we even get there. 3360, big supply level. This is the trend you want to see flip if you want to go bullish. So if we get above this back test, then we can possibly catch a bid. Whereas, as you know, under 3200, this is looking bleak. So we're getting to a critical point with the elections as well. Market makers are a bit undecided, but we have begun to see some wild SPY option plays hit the tape for the end of November. Now, mind you, these might be either A, hedges, B, they're getting ready for doomsday. Something is happening though, so everyone is on their toes and it doesn't seem like anybody knows where this thing is going. The biggest trades to note are 50,000 bear spreads for SPY 240 with SPY 230 puts shorted ending November 30th, 60,000 contracts for SPY 290 puts for November 4th, and April 2021 had 60,000 SPY 315 puts long and another bear spread with 90,285 puts long and 280 puts short. Dark pools above are 334, so that would put it at 3340, give or take, right here at the supply. Then we have 3370, that would put it right here at this base drop, at this breakdown, 3370, and then we have 3390 on the upside, whereas on the downside we have 320, 311, and 310. So we will see where this goes. You have your short term scenarios. Under 3200, not looking good. 3150, good bounce zone should we get there. And if we flip trend here, then we could come back even as far as 33.60 to retest this drop base drop. Don't forget that they could also play this out and just keep chopping around here, because for now, again, this is still a higher low. However, this looks like it's beginning to form a drop base drop. Huge liquidity levels here at 32.20, as you can see previously and now. So just stay on your toes. Similar story with QQQ or NASDAQ. 10,000 contracts opening up right into the close for 190 puts expiring June 2021. And Russell is a coin flip. Russell 9,000 contracts along 148 puts for November 6th. However, 10,500 contracts along for 170 calls expiring December 2020. I do want to look at Russell real quick, because Russell is in that daily rally, base rally, that I really do like right here. So this is a rally, base rally right here. This was another one. This did not hold, and as you can see, it got back tested and it came down. So now it's kind of a coin flip between what's going to happen between these levels. Now this is a previous demand turn supply, and this is still demand. So should this hold, or 148, let's say, on the low end, then I believe that we can break this and keep going up towards new all-time highs. But this is a very good load-up zone should it hold. And also, if it breaks here above supply, holds again. Whereas below this, again, nothing good happens. So Russell could be a good bullish play, so to speak, potentially. Moving on to Facebook. So Facebook went out with a bang for ER, as you know. One of our analysts, Jim, spotted the troubling amount of 230 puts long for November 6th, and as you can see, this is what happened off of those. Those are still open, by the way, and this ties in with the whole SPY QQQ indicating a sell-off potentially. Market makers, however, have shorted 215 puts, indicating that might be the floor, as reassuring as that seems. Across the board, it just seems like this week is going to be a risk off. Dark pools above on Facebook are 290 and 299, whereas below we got 245, 231, 224. So there's a lot below as well. However, this is right here, as you can see, the breakout, and it got tested and it held. So this is still a good point where potentially Facebook might catch a bounce. However, I do want you to note that this gap is still open. So this gap is still open all the way down to here. This gap is still open. There's nothing to say that we can't close it. So if we do drip below this line, this breakout right here on Facebook, this could potentially be a very nice short back down to 234, 230, and this area lines up nicely with some of the dark pools and the option flow should we break down, though. Don't chase puts blindly. This is a terrible sell-off, so not to say you chase puts blindly here, but if we break down below these levels on the weekly, this is a rally based rally, so if we break down below these levels, then potentially, as you can see right here, rally base rally, so under 255, nothing good happening with Facebook. That's right here. That's a confluence with the trend. So there's two options on this one. Either it holds here and there's a long, or breaks down and there's a short down to 230. Moving on from that, we have Qualcomm. So this chip manufacturer could potentially surprise a lot of folks with this earnings. With the hype and buzz around 5G, a lot of folks might likely expect Qualcomm to beat and reach an all-time high. Market makers, however, aren't convinced and have picked up 128 and 114 puts. Now, look at this. If Qualcomm comes to 214 right here, This is a weekly rally base rally. There's another one right here, rally base rally, but that one has already been tapped. However, if Qualcomm reaches 115, 114 levels and it holds there, this could be a nice possible play on a continuation above. However, if this breaks, then it could even get uglier than that and come down further to test this impulse right here. So we're gonna see if 114 holds. However, if it comes there, this might be a wonderful play. Moving on from that, we have the Chinese giant Alibaba, with the 33% stake in Ant and the world's largest IPO in the history of the stock market. Even though it's in China, Baba is poised to possibly break out. Market makers have shorted 295 puts for November 6th, expecting it to stay above, and at the same time shorting 400 calls for November 6th, indicating that it'll stay under over, but not sure quite how high it's going to get. It would be so this might have an earnings run. As you can see, earnings are coming up 11/5, which is this week. Gonna remove these. So looking at Baba on the daily, this right here, rally base rally, however, has been tested right here. As you can tell, this was a play that we had. This rally base rally right here was tested, caught a bid from here. However, if this low holds, then this is a good play as any. 295 puts have been shorted, so if this area holds on again into a higher low, this could possibly explode. 400 calls are long. ERs are coin flips, as you all know. However, if you want to play the run up, this, if a higher low holds, this might be a good run up to play. Outside of that, always please keep in mind on VIX, VXX. This is how we knew, for an example, Friday, that there might be potentially a short squeeze into close, because look at this. On Friday, this was contained, right? No crazy moves up like right here you have, no crazy moves down like you have here. It was all very neatly contained as indices were selling off. So that was the insight that we had to say, hey, maybe with the weekend coming, VXX not catching a bid, there could be a short squeeze into close. You can also, as you know, watch VX, which is the volatility futures, but they are coming into kind of a double top here. Very, very large liquidity pool here on the seller's side, very large liquidity pool here on the buyer's side. As you know, this is a rally based rally, so this is something we anticipated. I didn't buy. I gave you where to buy calls. Personally, I didn't buy because I'm cheap with the calls, with the entries, and it came like 2 cents away from my entry and I missed it. But it is what it is. Please keep an eye on VIX futures, or VXX, the ETN, whichever one you want to keep an eye on. But this is going to be very important. This is the regression channel right here, broken out. So as long as 31.30, let's say, on the low side holds, then risk off. Risk off with anything VIX above these levels, above this breakout, because technically it is breaking out of the downtrend. As honorable mentions, we have Regeneron, handful of 600 calls long for November 6th. Uber pricing a low of 31, top at 37. Roku moved to 220 potentially and then back down to 170. Square pricing a potential move to 180 and a potential bottom at 145, and Wayfair handful of 320 calls long for November 6th. Another one I want to bring to the table is Apple. Lots of people interested in Apple and whether or not this is the time to go long. So this is something you have to keep in mind when looking at Apple. Right here, this is a breakdown of trend. So the trend is no longer bullish. As you can see, it held this trend, and it could have, if it caught a bid and went up, this would have been a huge run. However, it broke down, back tested, couldn't stay above, and it broke the previous lows. We all know what that means. Unless it comes above this trend, above this breakdown, don't touch. Don't touch or short. Unless it pierces above here and holds. So if it comes above and it holds here, then yes, it can run. Unless it does that, this is risk off. This is a no-buy zone. As for potentially where it can go, that is anybody's guess. I don't like really speculating about distant future positions, but as far as I can see it, there is a huge in-your-face gap right here, and I would personally like Apple at 93 if I was to consider a long-term investor position into it. As far as day trading, then there is the possibility of a higher low here that you can play off of to 111, 112. However, if this low breaks down, it's most likely going to come to a higher low of 103 before breaking down completely. So that's that. Hope you enjoyed the report. If there's anything else you want to know or ask, as always, we're in the server. Ask away. I'll see you Monday.